Good afternoon, everyone. Welcome to 24th session, 24th weekly knowledge session on indirect tax. So we welcome you. So today, let us start with the judgments we have for the week, and then we'll move to the query session. So just give me a second. I'm opening the first judgment.
Don't do SR over here. She's saying I should listen to Leslie. He had said leave. I learned my lesson. This time, Lillian herself is coming and post. Nobody asked her for this.
So first judgment we have by Allahabad High Court in the case of Vadilal Enterprises. Citation is 2026 VIL 784 ALH. So this is regarding e-way bill. So in this case, what happened is when the goods was intercepted by the department and then thereafter detained by the department. So department took the statement of. To continue. Abhishek ji, there is can you see our videos, my and Ayush video? Yes, so there is no screen. We are just reading from the notes we have made. So yes, first judgment e-way bill. So in this case, what happened is when the voice not clear. Ruby ji, is it better now? Yeah, I hope it is better. So in this case, what happened is when the vehicle was intercepted, the statement of the driver was reported by the department on a plain sheet of paper instead of the normal format of the department, which is MOV01. Thank you, Aditya ji. So the case went to High Court, and High Court held that even though it is a procedure, MOV, the recording statement in MOV1 is a procedure, but in these type of proceedings, when a particular procedure has been defined, then that procedure has to be strictly followed. So if law has said that just give us a minute, there is some connectivity issue.
I think this video is not visible.
Yes, so the High Court no, you want to hold it here.
नहीं off. Meanwhile, Mohit is rejoining because of some issues. I'll take up the judgment then. So the first judgment that I would like to discuss is of Greenwoods versus Union of India, Bombay High Court judgment. Citation is 2026 VIL 835 Bombay BOM. So the limited issue that arose in this case was that the appeal of the petitioner was dismissed at the first appellate level for the non-deposit of pre-deposit, non-payment of pre-deposit. What happened was the petitioner filed the appeal at the first appellate level within 3 months, that is the time allowed under the law, and then paid the pre-deposit after that 1 month, but that is in the 1 month of the condonable delay period. So the first appellate authority rejected the appeal on the limited ground that since the pre-deposit was not paid within the time limit prescribed, therefore the appeal is not maintainable, and hence rejected the appeal. Petitioner went on to the High Court. What the High Court in this case categorically said is that if there is any procedural defect in filing the appeal, the first appellate authority is mandated to issue a defect memo or a deficiency memo, whatever they may call, a defect memo basically, intimating the appellant of all the defects therein, and then a time should be given to the appellant to cure all those defects. Non-payment of pre-deposit is merely a procedural requirement, and if there is any procedural defect, the first appellate authority was required to follow such procedure of issuing a defect memo rather than rejecting the appeal summarily on the very virtue that pre-deposit was not paid within time. So, had the appellate authority issued the defect memo and asked for the proof of payment of pre-deposit, the petitioner the petitioner would have shown the pre-deposit amount, and then the defect would have been cured. So, basically, what the high ratio that has been laid down by the High Court in this case is that any procedural defect, if there a defect memo should be issued, and a time limit should be given to the appellant to cure that defect. Although in this case, that pre-deposit was made by the appellant within that 1 month period and before passing of any order, but what the High Court meant to say in this, even they have not specifically said, but this is generally my view in this is that even if the assessee had not paid any pre-deposit within the 1 month period also, the department or the first appellate authority cannot reject the appeal as it is. They have to first issue the defect memo. That defect memo must give the timeline to the assessee to cure that defect. And if the assessee fails to cure the defect within that timeline, then only the appellate authority can reject the appeal. Therefore, even the assessee can make the pre-deposit payment of pre-deposit after issuing of the defect memo. The Sheetalji in this is asking that whether the deficiency memo is as per the law. See, Sheetalji, this is not as per deficiency memo that I have said, but that is also a defect memo. This deficiency defect memo. Defect memo is not say as per the law, but these are the general procedural or the guidelines that every appellate authority must follow under the GST section or rule. I don't think so there is anything written of the defect memo. But these are the general guidelines that any defect, any procedural defect, if any, as per the principles of natural justice, that a chance should be given to the appellant to cure that defect.
Yes. So, moving on, so first judgment, it was not completed. My apologies, there is some issue with my laptop today. So, in first case, what happened is, Allahabad High Court held that since there is a specific procedure defined, that MOV1 has to be issued for a statement, so that procedural requirement is essential. Statement can only be recorded in MOV01 with by filling all the details which have been given in the form. So until and unless that is done, the proceedings will be invalid. So even though we are reading this judgment only for the MOV01, but this is a very special and important principle because this applies throughout all kind of proceedings. So whether it is search proceedings, inspection proceedings where INS 01 has to be showed by the department, seizure proceedings. So in all these kind of serious proceedings, even the procedural requirements become very important for the department. So department cannot brush away these requirements by saying that these are only procedures, substantive compliance we have done. The department has to follow the process which is laid down in the law. Otherwise, the whole proceedings can be questioned by the assessee. So any inputs, Ayush?
My question, I do not have any input, but I have one doubt in this. This is very clear that MOV1, a prescribed form is there, MOV1, on which the statement of the person in charge of the vehicle should be recorded. My question is, there is no specific, marked area on that MOV1 where the person in charge of the driver, I will say, should sign that whatever has been recorded, it must be signed by the driver also, whose statement has been recorded. In one of our case only, I am telling you what happened was MOV1 was uploaded. and MOV1 was uploaded on the portal, there was the signature of the officer on that MOV1. Even if not, it was uploaded online, so we consider that it is valid MOV1. But there was no signature of the driver whose statement was recorded. And there is no particular, in that MOV1 form, there is no particular area also where the driver is required to sign. So if there is no signature of the driver on that MOV1, can I say that whatever has been written on MOV1 is incorrect because there is no signature, driver has not validated it, you must have written it by your own. Whatever is written in this has not been stated by the driver, has been stated by the officer only.
I believe in this case, the department has to satisfy the twin test. So first test is obviously what has been said by Allahabad High Court, that whatever is written in the law, that has to be followed. Unless and until prescribed form is there, the proceedings cannot be held to be valid. Apart from that, the requirements which come from general law or general jurisprudence. So this is a general law that whenever you are taking a statement of a person, that statement has to be signed. Unless and until that statement is signed, it cannot be said that that person himself has given the statement. So if department is not taking sign of the driver on the statement, then any day I can say that this is not what the driver said. The driver can say that this is not what I said, and department has no way to prove that this is what the driver actually said, because there is no sign to authenticate that this was what actually was said. So I think both this twin requirement has to be followed by department.
So basically, what I have seen in other e-way bill cases is that with MOV1, there is one attachment as well that the department gives on the portal only. The statement is written in Hindi or English in the handwriting only, and there the signatures of the driver are along with MOV1. But the main requirement is MOV1 is also there. In this particular case that I am telling you, there was no attachment as well. So with MOV1, so can I say if there is MOV1 as well as the attachment on which the signatures of the driver are there, then that is a valid, compliance with the law, and then only that statement can be considered valid.
I think that is sufficient. So it's not necessary that the statement has to be in MOV1 if it is given as an annexure. Then I think that is what we can say in true terms is a procedural defect which should not have any adverse impact on proceedings from department side also. So that is substantive compliance of the law.
I'll take up the next judgment. So I'll take up two judgments together. One very interesting judgment. One is of Delhi High Court and another is of Hyderabad GST. So first one is Gaurav Jain versus Joint Commission, and second one is Reddy Varanna Construction Private Limited. Before discussing the judgment, I'd like to discuss one provision of the law. Earlier in the GST law, there was no requirement to pay pre-deposit when the order related was only to penalty. So if there was no tax demand, while filing the appeal, I was not required to pay any pre-deposit, and I could have filed the appeal without paying anything. Now from 1/10/2025, the law was amended by Finance Act 2025, and requirement to pay pre-deposit was introduced even in cases when there is only a penalty demand in the order. So from there on, I am also required to pay 10% pre-deposit whenever there is any only penalty demand in the notice. What happened in this case was, first I'll discuss the judgment of the Hyderabad GST. What happened in this case was, the show cause notice was issued on 29th September 2022. Order in original was issued on 28th August 2023. And the impugned order, that is the order in appeal, was issued on 12th of April 2024. So three dates are there. One is of 2022, second of 2023, and third is of 2024. All the date falls before the date of amendment, that is 1st October 2024. The petitioner in this case filed the appeal before the GST. The appellant in this case, I'll say, filed the appeal before the GST. And the order was related only to the imposition of penalty. The appellant did not pay any pre-deposit amount. The appeal was obviously filed in 2026 only, that is after the amendment. So the department in this case said that the appeal is liable to be dismissed because no penalty, no pre-deposit of 10% has been deposited by the appellant. The appellant very well argued that the pre-deposit requirement came from 1st October 2025. However, the order in appeal in this case pertains to
12th of April 2024, that is before the period of the amendment. Hence, any particular amendment that has come from any particular date, the provisions of that should apply prospectively. That is, any order passed after 1st of October 2025. Since in this case, the order was passed before that date, a pre-deposit in respect of penalty is not required to be made by the appellant. GST in this case agreed with the arguments of the appellant and said that whatever the amendment has been made in the law, the date of that, the provisions of that amendment should be applicable from the effective date. And if the order is before the period of that amendment, therefore the petitioner, appellant in this case, is not required to pay any penalty. One thing that is important to note in this case is that the GST in this case relied upon the date of order in appeal, that is April 2024. Since the order in appeal was before the period of amendment, therefore no pre-deposit was required to be made as said by the GST. Now, when I come to the case of Delhi High Court in the Gaurav Jain case, important thing to note in this case is that the order and appeal date in this case was 21st. In this case, what was it? It was after the it was 16th December 2025. So in this case, the order and appeal was issued on 16th of December 2025. That is after the date of amendment of 1st October 2025. However, the show cause notice was issued again in this case was on 2022, and the order in original was again issued somewhere around 23 or 24. The Delhi High Court gone a step further and said that the list in this case arised on the date of the show cause notice. That is, the entire proceedings has to be seen from the date of the show cause notice, and any amendment to the provisions, the effective date should be compared with the date of the show cause notice and not with the date of order in appeal. So in this case also, the order in appeal only imposed the penalty upon the petitioner. Petitioner did not pay any 10% pre-deposit. Therefore, the High Court, Delhi High Court in this case clearly said that since the show cause notice date is before the period of the amendment, that is 1st October 2025, therefore, even in this case, the petitioner is not required to pay any 10% pre-deposit, even if the order is composed only of imposition of penalty. So what is the comparison between the two judgments is one of Hyderabad GST and second is of Delhi High Court. Is in the GST judgment, the GST said that the order and appeal should be looked into, and if it is before the period of amendment, the provisions effective on that period should be applicable. But Delhi High Court said that the show cause notice date is the date that should actually be considered, and whatever the provisions are applicable on that date should be applied. So I think the Delhi High Court judgment, since it's a Delhi High Court judgment, it should prevail over the GST judgment. However, they are of not the same jurisdiction. But in my view, Delhi High Court judgment has more merits because the list has arisen only on the date, only when the show cause notice has been issued, and therefore all the provisions applicable from the date of show cause notice on the date of show cause notice should be applicable in this case as well. Do you have any views on this?
I think this, again, any judgment we should not see only regarding the ratio which has been led, but what the principle is and how that principle can be applied in other cases as well. So I believe that this principle we can apply in a lot of cases. So for example, for refund application, so let's say some new refund provision came. So for example, when rule 96B was introduced, that for export of goods also you have to get the realization as per the period given by FEMA. So if someone, for some person, the refund period was before the date of amendment, but the refund application was filed after the amendment came into force. So they're also applying the same principle that the right of taxpayer to get the refund arose when the relevant date comes. So relevant date in case of export of goods is date of export of goods or the date of export of goods. So that is basically denoted by let export order. So the moment goods are exported outside India, the right of the taxpayer to get a refund is crystallized. So only the provisions which existed as on that date has to be seen. Any subsequent amendment will not have any effect on the right of the taxpayer. So when any subsequent restriction is imposed by the department, or sorry, imposed by the government by way of amendment in act or rules, that will not have any impact on this. And similarly, in a lot of other cases, so any provision related to show cause notice. So, for example, show cause notice, they have increased the time period. Uh, Even though they have, in the provision, they have clearly mentioned that from financial year 23-24 onwards, new section 74A will apply. But suppose this was not mentioned, they if only they amended the time limitation. So again, we could have followed the same principle. So this same principle, I believe, can be applied in a lot of cases. Right. So now moving on to the next judgment. Next judgment we have by Gujarat High Court. So again, a very interesting judgment, I would say. So this is in the case of Mono Steel India Limited, and this is given in the context of central excise regime. So in this case, what happened is in 2011, the government came out with an exemption that any ore or iron ore pellets they are exempt from exempt from central excise. Later on, in 2012, the government issued a circular saying that this exemption only applies to ores. This does not apply to concentrates. Ores and concentrates. So these are two distinct products. This exemption is only applicable to ores. This exemption does not apply to concentrate. So on that, you have to pay tax from starting because this is a circular. So this is only clarifying the law. So this has retrospective effect. So the case went to High Court, and High Court said that although circulars have retrospective effect because they are merely clarifying the law, but where an exemption has been granted by the government, and that exemption is being taken away by issuance of a circular. In that case, the effect has to be prospective. It cannot have a retrospective effect. For that, they relied on the landmark case of Sutitra, wherein it was held that any kind of retrospective clarification, any kind of clarification of law which is against the assessee cannot be applied retrospectively. If it is against the department in favor of the assessee, it will apply retrospectively. But if it is against the assessee, then it will apply prospectively. So then this is a very, very important judgment, especially in GST law, because in GST law, we have seen the circulars which are being issued by the government, especially in last 4-5 years. In those circulars, they especially mention that even in beneficial circulars, they especially mention that for prior period, if you have paid excess tax, so let's say there was a dispute of 12 versus 18%, and the government says that 12% is applicable, but in circular, they explicitly mention that for the past period, 18% is paid, then no refund can be allowed. So if these requirement is given in the law, it is fine. But if these kind of restriction is imposed only in the circular, whether these kind of circular can also be questioned by applying this principle or any other kind of circular wherein some clarification regarding a higher rate of taxability, denial of exemption, all these kind of circulars, this same principle can be applied, and we can argue that any transaction done before the date of circular, uh, it will only affect the prospective transaction, not the retrospective transaction. Case law again at last. So, Shitalji, this case law we have by Gujarat High Court in the case of Mono Steel.
I think she's asking about the case law that I was discussing because we shared earlier also.
Achha.
But so we will share the list of case laws on the WhatsApp group.
WhatsApp group will share.
We'll share after this session. We will share the list of whatever we have discussed. So there is one more judgment that I will discuss of Tamil Nadu High Court. Although I mean this has already been clarified by the circular, but again the Tamil Nadu High Court in the case of Indian Railway Finance Corporation Limited. So in this case, what happened was that for the period say 21-22, some payments were made to the vendor, and then after 2 years, RCM liability was paid and the ITC was taken for the same. So the department denied that RCM ITC on section 16.4, citing section 16.4, saying that the time limit for claiming the ITC has expired, and therefore you cannot take the ITC. Since we all know that the RCM credit not depends upon the date of invoice issued by the vendor, but on the self-invoice made under section 31(3)(f). The self-invoice that was made by the petition in this case was on the date of the payment of liability only, in the month of the payment of liability only. And the credit was taken on that date. So the Madras High Court as well, Tamil Nadu High Court in this case said that since the 16.4 governs from the governs the availment of ITC, time limit of availment of ITC from the date of invoice, and the date of invoice relevant in this case is the self-invoice that has been issued by the petitioner. Therefore, the ITC that has been taken by the petition is very well within the time limits prescribed under section 16.4, and they allowed the ITC in this case. I think this was also clarified by the circulars, and there was also an amendment in the law related to this. So it is a clear position that whenever you have making your own invoice under section 31(3)(f), then only the time limits will apply. Yes, you can argue on the point that if you are paying RCM liability after 2 years, interest may be applicable. It can be done if the time of supply is the date of payment. But ITC cannot merely be denied on this basis.
So moving on to the last judgment for the day. So last judgment we have in the case of Arya Metals, again by Gujarat High Court. So I think this is a very established principle, but since it is something which a lot of professionals face on a day-to-day basis, so I thought I'll cover it again. So in this case, what happened is a show cause notice was issued by the department to the assessee. When filing the reply to the show cause notice, the assessee, well, there is an option which comes whether you want personal hearing. So the assessee selected no in that option. Then also department issued a notice for the hearing, but in that hearing notice, it was not mentioned that what is the date of the hearing, time of the hearing, or venue of the hearing. So then order was issued by the department saying that since you did not want hearing, even then also we offered a hearing, and therefore the order is valid. So the matter went to High Court, and High Court relying on section 75 subsection 4. Which says that opportunity of hearing has to be given where either a request is received from the assessee or when an adverse action has been contemplated. So these both are independent requirements. So even if there is no request from the assessee, but the department is taking an adverse action, and the High Court also said that issuance of show cause notice itself means an adverse action, because that means you are confirming a demand upon an assessee. That is why you are giving him an opportunity before confirming the demand. So essentially, after issuance of show cause notice, if the department wants to confirm the order, if department is dropping the order, then it is fine. Then also, if assessee wants a hearing, it can be given. If assessee does not want it, should not. It may not be given by department. But if the show cause notice demand proposed in show cause notice is the department wants to confirm that demand by issuing an adjudication order, then it is mandatory for the department to give hearing, irrespective of whether the assessee has said yes or no to the hearing. And for that also, the High Court said that minimum 4 hearings, we can say 3 adjournments, that has to be given by the department. So hearing 1, assessee did not appear, or took adjournment. So same way, 3 adjournment can be taken by the assessee, and 4th hearing should be the last opportunity given by the department, not less than that. So department cannot just give 1 hearing or 2 hearing, and if assessee does not appear, then department cannot straight away pass the adjudication order. Now this becomes especially relevant, like we are approaching 31st August, which is the last date for issuing show cause notice. So, but when the time limit for issuing order comes, the time limit for this 2021 financial year, the time limit to issue order is 20th February 2027. So in a lot of cases, what we have seen is that for a lot of matters, if the last date is February, till January department will not do anything, or they will, in a lot of cases, they will not do anything, because department is also overburdened with a lot of cases. So till January, department will not issue any notice. Suddenly in February, they will start issuing notices. So as per this judgment, the department has to give sufficient time. So it should not be done in a way that on 20th February, the last date is 20th. On 20th February, department issues a hearing notice that your hearing is on 21st February. If I do not go, next hearing is on 22nd February. If I do not go, next hearing is on 23rd February. I do not go, next final is on 24th and pass the order. Because every hearing, sufficient time has to be given. It cannot be done in a way that only you are giving 1 day or 2 day notice. For every hearing, a reasonable time, I would say, is at least a week. So at least a week time has to be given. So this is a very strong ground to argue wherever 3 proper hearings have not been given by the department with sufficient time. Then it is a very good case, a very good argument we can take before the High Court or even before the Honorable Tribunal to say that the order itself is invalid. So any inputs, Ayush?
I think it is an established principle also. Earlier also there were judgments in the of the high courts only that even if the assessee has selected no, mandatorily personal hearing has to be given. And there has to be a sufficient time limit between the date of 2 hearings. It cannot be same that, because I specifically remember I was reading on case law wherein the 3 hearings fall within the same week. The date of 3 hearings fall within the same week, and then the department said that as per the law we have given 3 hearings, and now the adverse order was passed. So if any remedy, if any, opportunity is given to the assessee, that has to be an effective opportunity, effective remedy, not merely existing on the papers. So as Mohit said, that there has to be a sufficient time. What is the sufficient time? Again, can be of debate. 1 week is a sufficient time or not. This can be of debate. At sufficient time should exist between the date of 2 hearings. It cannot be a mere paper formality by issuing the same number of hearings within the same week.
I think that concludes our case law discussion for the day. So if any participants have any query related to the case law or any other query related to GST indirect tax law, that we can take up.
Hello.
So participants can either type in the chat box or they can even unmute themselves and
Hello. I have a query.
Aditya Kabraji is trying to say something. You are not audible to us, sir.
Just a minute. Yeah. Am I audible now?
yes, you're audible, but your voice is a bit low.
Hello. Can you hear me now?
Can you type it in the chat box, sir, if it is possible?
Okay, I'll do that.
Yeah, Govinda here. Are you hear me? Hello. Are you hear me?
Yes.
Yes, Govindaji, we can hear you.
If I paid the RCM on the royalty for the year 18, 19, 90, 20, can I take credit now as per the discussion on the Tamil Nadu case
So when did you make the payment?
before 2 months?
So 2 months before, if you have paid, you can avail the ITC, provided, again, 2 things have to be kept in mind. The self-invoice date, which has to be issued under section 31(3)(f), that should be 2 months before. And the payment should be under 73.
Payment
Because
should
this
be
is one
73.
thing which is not usually discussed, but if a payment has been made because department pointed it out and payment has been made under section 74, then also ITC will not be available. So
Okay.
if it is a self-payment, then obviously it is 73. So then you can avail ITC, not an issue.
Okay. If I know client receive a notice, maybe 1 month, next 1 month, then I can pay under section 73 RCM liability. Then I can take a credit about it.
So, see what in reverse charge liability, there are a lot of judgments which says that payment of RCM is a revenue neutral transaction because you will pay and you will take ITC, provided ITC is available. If ITC is not available, then the argument is not available. But if ITC is available, then it is a revenue neutral transaction. And in these kind of transactions, section 74 cannot be invoked. So we do not have any judgment in GST regime, but there are a lot of judgments in service tax, excise, customs, and all these laws. Sorry, in service tax, reverse charge was only in service tax. So service tax, we have a lot of judgment. So we can, in that case, we can argue that even if the department has issued a notice, the RCM liability was always supposed to be under Section 73 because there was no intention of fraud. Earlier also, if I had paid, I would have avoided ITC. So this was only a genuine mistake. So payment should be under 73, and since it is under 73, as relying on the circular and the judgment, High Court judgment, I am entitled to avail ITC today.
Okay. Okay. Thank you.
Parsha Ditya has sent the query on chat box.
In one of our cases, we are claiming refund of late fees paid due to GSTR 9 filed late. We are taking side of Madras High Court and Kundan Mart case, which says as per Article 14, late fee should be waived off for those who have filed return before amnesty scheme 2023. Department says that waiver and refund are two separate things. We are of the opinion that both have the same financial effect. What should be the right course of action? So see, your views in this case, I will agree to it. In this specifically this Kandan Hardware Mart case, see what Article 14 says is about that two persons of the same stature, same everything, cannot be placed unequally under the law. So if I being paid already filed GSTR 9 before the amnesty scheme and paid the late fees, later on for the same classes of person, amnesty scheme has been introduced, and in that amnesty, the late fees was waived off. So it is a clear-cut violation of Article 14 for the same class of person, as both have filed GSTR 9 late, but one filed GSTR 9 before the amnesty scheme and another one took the benefit of the amnesty scheme and filed GSTR 9. So whether it is a waiver of late fees or a refund of late fees, it should be the financial impact of it, again, as you said, should be considered as same. And both the class of persons have made the same default under the law, and therefore they should be placed equally under the law. And if the one is not required to pay any late fees, the other one who have already paid the late fees should be refunded that amount.
I have a slightly different perspective on this because this issue is not just limited to amnesty scheme for late fees. We have a lot of different kind of amnesty scheme for appeal filing, for even for tax payment. So in GST we do not have any scheme currently, but in service tax and excise, in service tax we had SVLDRS, which was introduced in 2019, where basically you just pay 30% or 40% of the demand amount, and interest, rest of the tax, interest penalty, they will be waived off. In VAT also we have a lot of these kind of a scheme. And going beyond from tax law, there are a lot of schemes, other schemes by government, wherein some loan has been given by government to farmers, and for late, the farmers were paying late, the interest is waived off by the government. So this argument can be taken in a lot of cases. So if we say that just because amnesty scheme, because if we go by this logic, then any kind of amnesty scheme will be invalid. Because either the amnesty scheme has to give the benefit to all the persons which made the payment, which will then become impractical. So to what extent this logic of Article 14 can be applied in an amnesty scheme, which is a deliberate scheme introduced by the government to streamline compliance of the non-compliant taxpayers. So there I have a slightly different view that it has to be applied in a limited perspective. This blanket argument will not be possible because otherwise this will become very wide and this will impact a lot of any kind of amnesty scheme in any kind of law introduced by the government. So somewhere court has to balance both of these things, public interest as well as Article 14 application.
So it is always said that law always punishes the compliant tax person. So, and this also we know, we were discussing, you were already discussing that circular comes on as is where is basis. So whosoever has paid the excess tax is already punished. It is not that the person who have not paid the tax has been given the relief. It is the other way, that those who have paid the tax has been punished. So I mean, both the arguments can be taken. It's slightly difficult, but you can always take the argument, sir.
Thank you. Thank you so much.
Oh.
I think Sheetal ji has also typed a query. So I want to know any case where DRC 7 was incorrectly passed for 2 lakh rupees, interest and penalty, interest applicable, penalty same under section 74. Then I applied for rectification of order and DRC 8 was passed, but a rectified order issued with reduced tax amount, but penalty was not reduced. So tax was reduced to 50,000 from 2 lakhs, interest as applicable, but penalty remained the same as 2 lakhs. So Shitali, that is a consequential relief. So if your tax itself is reduced to 50,000, penalty is automatically 50,000. Department can never say that I am reducing your tax to 50,000, but penalty I will take 2 lakh, because interest and penalty both are consequential actions. So if tax is reduced, they both has to be reduced. Department does not have the power to demand the original amount if the tax itself has been reduced.
I think no particular case law is there that I remember, if you know, because Sheetal ji's specific query is that
Any case law, right?
I mean, see, understanding is clear that even if it is a order under section 74, section 74 in itself is that the maximum penalty is to be of the amount of tax amount only. So that understanding is very clear that whatever the department has done by not rectifying the penalty amount is wrong. But any particular or judgment is that I do not remember specifically. So, okay.
Thank you, Sheetal ji. Any other queries?
I think nobody has any query. We receive any in Google.
Definitely.
We can have a session, a joint session, definitely. Interplay of GST and IBC Act. I think if you can share on one-to-one your contact information. Yes, Mohit has shared his number.
So I think if we do not have any more queries, then maybe we can conclude for the day. So आज सबको 10 मिनट जल्दी छुट्टी दे देंगे हम. So
Okay.
thank you so much everyone for attending our 24th session, and see you next Saturday. So same day, same time.
Okay.
Thank you.
Next Saturday is an Independence Day, but we are having the session, right?
Yes, acha, okay.
We'll see we are having the session or not. Next Saturday is an Independence Day. So we wish you happy Independence Day in advance. We'll see if we will have a session on that day or not. So we'll communicate to you in advance only. Thank you so much.
Thank you so much. Okay.